Let's bring in Dick Bove, always a great guest of the show, Rafferty Capital Markets banking analyst. I guess just a general question to you first, Dick. Why can't we hit this magic 20,000 on the Dow? It's become almost comical.
Oh, I think we'll hit it. I just don't think it'll happen, in the last few days of 2016 because nobody's around. There are no serious traders doing business at the moment. When you get to the beginning of next year and there's this huge increase in funding in the pension funds, because of the contributions, when you see the earnings coming out of the, if you will, companies like Goldman Sachs, I think will penetrate it without any trouble whatsoever. But, there's just no reason for anybody to get very aggressive in buying anything, between now and the end of the year.
Well, okay. Well, put some cold water on that, Dick. All right, well, let's talk about the banks in particular, as we always do, of course, with you. Is there still room to run on the financial sector? We have some analysts who say they don't like the banks that much, but my theory is they're going to, interest rates go up, they get more money back on the loans, there's going to be more deregulation. It should be, plus an economy that's starting to heat up, and if Donald Trump can get the, the reforms in that he wants, all of that, to me, should be positive for the banks, correct?
Yeah, no, I agree with you, but I really would like to change the emphasis at looking at banks from interest rates to what is more important, and that is what happens to the products that they sell. Are they selling more products, and are the quality of the products they're selling any good or not? In other words, are they making more loans, and are those loans going to come back and bite them with losses, or are they good loans? And I think that when we look at what Mr. Trump is presumably going to be doing over time, they will be selling a lot more loans, and the quality of those loans will be quite good because the economy will be in good shape. And, 2 days ago, there was a very important, if you will, development at the Federal Reserve, which I think, indicates that regulation will be cut back. In other words, one of the missing, if you will, jobs at the Fed right now is the person who is supposed to be a head of bank supervision. That job has been taken by a guy named Daniel Tarullo, even though the president has not nominated, and President Obama did not nominate anyone for that position. Tarullo has been brutal on banks. He's been brutal with regulations. He's slowed down the growth of the economy based upon what he's done. Yesterday, it was indicated that the president-elect was speaking to John Allison, who would take over the position as bank, if you will, regulator at the Fed. If that happens, it means Tarullo has been fired. Sure, he's still going to be on the board of the Fed, but he's been fired. He's not going to be running regulation for the banking industry through the Fed, and he's going to be in an also-ran position, clearly not serving at the, if you will, backing of the president, and he'll get out. Allison is not going to be in a situation where he's going to drive bank regulation more strongly. He's going to weaken it, and that's going to be very positive for the banking industry.
Very good. Interesting stuff. Dick Bove, as always. Dick, thank you very much for joining us.